Hello viewers, in this video I'll be going over the S&P 500 or the ETF that tracks the S&P 500 SPY. So last week I forecast that we will be more likely heading down rather than heading up due to this resistance level that I drew. This resistance level dates back to all the way of last year, back in February, as resistance. This is possibly a head and shoulders pattern forming. As you can see, there's a shoulder, head, and another shoulder. So that could definitely be forming. But in the next coming days, I do see the S&P will be heading up in a couple of days because, as you can see in the 4-hour chart, we are oversold on the 4-hour RSI, and we are at the 800-hour moving average, which is pretty decent support level, and we did bounce off that today. And let me mark that as a support level, which is right around here. And then let's go to the weekly chart. On the weekly chart, we see the support on the 9-week moving average that acts as another backup support if the 4-hour support doesn't hold up. So let's draw that support next. Reason why I drew these two supports is that, as you can see on the daily chart, there is really no moving average support other than the closest one, which is all the way down here, the 50-day moving average. And that drop is approximately from here to there, which is quite a lot, 2%. But overall, I do see this heading up in the next coming days. Why? In the other module, I compare this trend from 3 months to now with the other trend that I found. So in this module right here, this is the current trend and the trend I will be comparing it to. As you can see, it's very somewhat similar. I'll point it out. You have the candles exiting outside or exiting out of the bearish, let's remove this, bearish trend that we had back in December. And let me draw nice. Okay, so we have it touching the bottom Bollinger Band on the current trend and touching the bottom Bollinger Band on this trend as well. If you're not familiar with Bollinger Band, it's a tool used to measure price volatility and price and volatility. So after hitting the bottom Bollinger Band, we have intense upward trend right here. And as you can see, this trend also have an upward trend as well. A clear indication that it never dipped below the middle Bollinger Band. And this also never dipped below the middle Bollinger Band as well. And now we are below the middle Bollinger Band. As you can see from yesterday's and today's price action, we have it here. And let me draw on the other trend. The other trend had the same action right below the middle Bollinger Band. And you can compare the MACD. As you can see, this MACD from here to about here, when both moving average and diverging and converging are negative, and then it turns positive on the latest second half or 3/4 of the MACD is positive. And let me draw down here as well. As you can see, the trends is similar. And I have reason to believe that similar trends do output similar forecasts in the future. And we should use that as a guideline. And let me draw that here. And if you're wondering, this trend that we're marking up on is the November 26th to August 30th, 2010. So we have these two trends, and let's see the forecast model. In the forecast model, I'll be projecting where it will be heading to in the next coming days based on past movement. So this is day 1, day 2, day 3, day 4, day 5, day 6, and day 7. Again, the model that we took a look at was November 26, 2010 to August 30th, 2010. And it does say that it will be up around 2% in the next coming days. So if you enjoy this content, feel free to like, subscribe. Thank you for watching.